Hey everyone, Mike Wolf here. Thanks for tuning in. Hope you had a very Merry Christmas and Happy Holidays. And I just kind of want to recap what happened. It's almost the end of the year now. So I kind of want to review what happened in 2012 in the world of real estate and just kind of summarize where that went and where we're going to be starting off in 2013. So there's some major changes in real estate investing that occurred in the last 12 months. And a lot of it really started with Warren Buffett going on CNBC and basically making a comment that this was in February of 2012. He made a comment basically that if he had the manpower, he would buy several 100,000 single-family homes across the United States. And what this did is it took a lot of people on Wall Street and a lot of different funds, and they turned their attention from the stock world, which is normally what Warren Buffett talks about. He doesn't normally talk about real estate. He's a stock guy. And that's how he made his billions of dollars. And all these people said, well, if Warren Buffett says that real estate is a good investment, maybe we should be looking at that. And so all these various funds, when it flooded several different U.S. cities, particularly Phoenix was particularly heavily hit by them, and they bought up a lot of inventory. So it made it very difficult for small investors to go pick up one or two properties, on stuff that made sense, stuff with good returns. Because part of the problem is a lot of these funds, they're not run by real estate experts. And so these funds are basically just looking to park their money, get even moderately good return on investment, collecting the rent every month. And they're becoming some of the hugest landlords now across the United States. So they caused prices to go up considerably in quite a few different markets and made it very difficult for the small guy to get one or two properties in a lot of these markets. So what's happening now is they've driven up what we like to call the sexy markets. They drove up prices in places like Las Vegas, Phoenix, Orlando, Miami. All those very popular trophy markets, as we like to call them, all went up. And now what they're doing is they're starting to head towards what I like to call the emerging markets, places like Atlanta, where I'm quite heavily busy investing myself and finding properties for my investors as well. So that's kind of where we're leaving off at the end of 2012 with billions of dollars now going into residential real estate. And like I said, a lot of these funds are buying up huge packages. And 2013 is going to start off as a continuation of that. We're going to see a lot of small-time investors getting driven out of the markets. But what this also is going to mean is probably we're going to see this trickling down to other countries. So a lot of potentially Canadian markets, although I don't think they make nearly as much sense, but if you have billions of dollars of other people's money and you're using that to acquire properties, you can get a moderately good return on investment when you're paying cash, especially if it's not your own cash. So we might start to see that happening in some other places as well. It may trickle down, and we may see some changes in Canada as well as countries all across the globe. So it's going to be an interesting year, 2013, and I'm looking forward to seeing where it goes. I'm still actively investing. I just set up a RSP eligible fund here in Canada, and we're using that to do things even bigger than what we've been doing. And I'm committed to helping smaller investors still to get properties. Although we may buy properties to sell to these funds as well, I'm always going to be trying to help my friends and other investors that I've helped over the years to basically acquire properties in these markets that are going up. And so what I'm suggesting is if you have any interest, particularly in U.S. real estate, the U.S. real estate market, really, if you can be ahead of the curve, get into some of these cities before the funds get there, you're going to see these prices rising as these funds go in and pay big dollars to acquire a lot of single-family residential rental real estate. If you can be ahead of the curve, you're going to see some pretty good gains. I'm also suspecting we're going to start to see rent going up in a lot of these different markets. As the prices go up, as these funds go in and cause the prices to go up, you're probably going to see a lot of lenders coming out of the woodwork and all of a sudden starting to lend. So that now a lot of these renters are now going to try to become homeowners if they can get their hands on some property as the money becomes available to them. So once again, it's important to be ahead of the curve. I'm always researching. I'm looking at markets both in Canada, the United States, and now I'm looking abroad as well. I just came back from Nicaragua. I was also in Mexico. I'm going to be checking out some markets down there. I'm really Fond of places like Costa Rica, and I'm going to be checking out Belize as well. So Central America is definitely on my radar, as well as South America. I may also be looking at some other markets in other parts of the world as well. So stay tuned for lots of good stuff in 2013. I'm also going to be releasing my first book. Hopefully at least one, if not several, online real estate courses, and lots of great announcements to make that I can't really divulge right now. So stay tuned. I hope you have a great new year, and I hope 2013 is your best year ever. Thanks for tuning in. We'll see you on the other side.